Hello and welcome to another video. In this video I'm covering the another leading bank of Canada. This is TD Bank Group and under the ticker TD. So which is here. Myself Pramod Kumar. I am a CFA charter holder and FRM certified. I also have my website which is riseanalytics.ca. Mostly I have a CFA lectures there, but I'm planning to put more lectures for the common people. And I'm waiting for the 1,000 subscriber for that. So why I'm doing the TD Bank? Of course, there are two reasons for it. The first reason is today the TD Bank announced their result. Actually, that's the second reason. And the first reason is, let me show it to you. So right now I'm showing you one of my video, which is, so basically under this video, if you notice, if I notice there is one of the comment, oops, I think I mistake some wrong button. Yeah, so I did the Nike fundamental analysis on the Nike stock as well, and underneath the person named Mr. Luthra, he suggested that if I can do the TD stock as well and also the BMO, right? So that's one of the reason. And that's I'm doing this. So I just waited for today because today TD announced their result. So I thought, why not take the latest data and do the video on it. So as some of you know, yesterday, who is a regular on my channel, that yesterday I did the one of the leading bank of Canada, which is the Royal Bank of Canada. I did a video on it yesterday. So the full fundamental analysis of the Royal Bank, and then recommend my opinion, what I am thinking of that, right? So today what I'm planning to do, let me take the agenda. So I'll go on the similar steps, but I'll do a twist, because rather than going into detail on this, because I also already have my data on the RBC bank, which is the ticker, which is the short name for the Royal Bank of Canada. So what I'll do, I'll compare. So first I will go to the TD business and TD business and see, okay, what kind of what kind of a different business segment they have. Try to understand their business, and then try to see, okay, how much is their digital growth, because digital is very active growth. We as a Canadian and as a TD known bank, we know that the TD and RBC or the Canadian banks are more stable. So the more focus is given here for the long-term investment to see is the bank is moving towards the digitalizations, right? Because that's where the future is. How many active digital customers they have. Similar kind of analysis I also did for the RBC as well. So I'll put a link in the video. If you haven't saw that video, I'll suggest you can go and watch that one as well, maybe after this video. And also see if the TD is a G-SIB bank. So that's also very important to know, because right, because G-SIB banks are the global systematic banks. And then we compare with TD earnings, the financial, with year-over-year comparison or the quarter comparison on by the market conditions with the RBC bank. And then also do the free cash flow comparison on 5-year average with RBC, and then form the opinion, basically, right? So that's what I think my philosophy on the TD bank. So without further delay, let's get started. The reason for me, maybe I just put here, is why I'm doing the comparison, because sometimes people think either should I choose RBC or either I choose the TD. So that will give them a quick benchmark as well and highlight. Okay. So let's get started on the diversified, on the business side, on the corporate profile, we can see that, okay, maybe I'll move myself here just to see, so you can see the quick picture. So on their headquarters is in Toronto. They have 26 million customer worldwide, and they're 14.3 million active digital users. So that's what they're claiming in the company profile. Okay, so that's thing. And on the business segment wise, they only have 3 components. if you see there, if I combine if a US retail, which is the 20% here, then they have a Canadian retail, which is a very big chunk. Basically, it's just the regular banking. We go there and do the customers need whatever for the common people. And then they have a wholesale banking as well, which is 12%. If I compare with this segment with RBC, RBC has a very broad range of market as well. They are very heavy into the capital market, insurance, and other sector. They also have it, but they more club. They didn't show in the their segment of that is very low as compare, especially on the capital market side. So and they didn't provide that segregation on here as well. But okay, so just want to highlight that point. Now, in terms of the digital active, I just got this point. So they have 3.6 million US mobile user, 5.7 million. Basically, they have the people who are using their mobile apps or the digital customers, right? So which they have it. So that's pretty good from the digital active perspective. Okay, now let's see, is the TD is the G-SIB bank or not, right? And I went to the website. So this is the website of the FSB board, the Financial Stability Board. And here you can see here in the bucket 1, they have a few bucket. In 2019, basically every annual year they do this. So I see the TD name here as well. You see, I did yesterday RBC is the name there as well, and TD name is here. So 2 Canadian bank from Canada, which makes into the G-SIB, Global Systematically Important Financial Institutions. So these are they, and these are the very important to or very prestigious to make it in this list, right? Because there's some rules published by the central committee, which is the BCBS. They publish some methodologies and rules and identify what G-SIBs are it. So as you can see here, right? So that's it. And I also went to their website, and basically they recently, I think in the last year they became it. So there's pretty new member. So as they claim, TD designated as G-SIB bank, right? November 22nd, announced today, right? They announced today. So what is it? So basically from the capital perspective or the capital hold perspective, for whoever in the G-SIB and in bank and in bucket 1, they have to put extra buffer. So suppose if they have certain loss, they have to keep 1% of their capital buffer extra. So which is the extra security, which especially in this kind of an environment, they need to hold. And I'm looking from that perspective. So if, for example, if certainly many Canadian, we know that they are not paying the mortgages, they are deferring the mortgages, right? So these banks are losing in terms of the interest income, right? And if they're losing in terms of the interest income, or maybe many defaults are coming. So that's why you see a lot of banks, the PCL the ratio is higher. Similarly, on the TD side, I find it's higher, but that's known, right? So I don't want to go into deep. So that's why the profit margin is less. But this, if they have certain kind of extra buffer in terms of the liquidity, so it will be good. So they don't be in the trouble. So that's one of the criteria to have it. I didn't find the BMO here or Nova Scotia or any other, as you can see in this list. So that's one of the reason for me I didn't do it, and also from the time perspective, right? If somebody want me to comment that I should be doing, I can do the high level on that one, but I think these 2 leading bank should be good. But let's say whether we can go further deep into TD or not. Okay, so let's go back to the agenda. So this is a checkbox, right? So this is another good point about TD. Okay, so comparing from the historical return, although we know that history is not the future, but mostly the banks or the utility companies, for example, they don't change that much, right? Because their business is as usual. Whatever they don't do much innovation, and whatever the money they have, most of the money they give to dividend, and then they invest into the business mostly for digitalization or some other to support them. But so I didn't expect the future to be much different. So, but here, if I compare, blue is RBC and green, we know the TD is the green color, so that's what I choose here. So the free cash flow basis, I think I have missed here. So this should be green is TD, right? So they have a more cash flow on average. It's $24.79 billion, and on the TD, you see, on the RBC you see is little less, $23.13 billion, almost like a little over $1 billion less. On the return side, the RBC return, which is the blue box, 5-year return is 6.69%. But on the TD 5-year, if you invest in TD, you will get 5-year return is 6.10%, right? So almost like a little over 50 basis point less in TD. But on the 10-year average, the TD beats RBC, right? So TD is 50 basis point up. So seems like they make next 5 years. And on 15-year, if we take the return, daily return average, then RBC again beat TD, but by the very small by number, right? 15 basis points, so not that much. So, but if I go for a very long 10 to 15 year, mostly I think they are going hand to hand. So nothing much major difference here. Now let's go to the company. Let's go high level compare, and then we'll go deep into the details. So I'm right now on the Yahoo Finance and see the stock on the RBC side is trading right now as $91, and the TD stock is trading at $60. So this is the Canadian dollar, so $30 less in terms of the per share price. And the market cap, if you see, if you want to go today and buy the whole RBC, in terms of market cap, so that's $130 billion, $0.051 billion you need to spend and get the whole RBC, right? The TD is 109. So if you see from the market cap perspective, if you want to rank the stocks, then RBC places number 1, and TD it comes as a number 2, right? If you just compare from that perspective. The price E ratio, right now RBC is coming as a little bit more expensive, which is you're paying for per earning PE is 0.25 times per for their earnings. So basically for every $1 of their earning, you are giving them $10.25. But if I go and compare with the TD, this is a little bit cheaper, which is $9.51. But right. So this is very high level. But let's see, for $1, if you see the last 12 months of their earning, TD is only earning, one share. So TD is only earning $6.59, right? And RBC is earning $3 more per share, right? If you think from that perspective, although you are paying $1.25 extra, but you are getting $3 more for per share earnings. So if you think from that perspective, I think then RBC is better in terms of the rather than PE ratio. It's not expensive, right? If you just ignore the $30 price difference. Okay, and overall the dividend is basically is 4.68, but that I'll cover in more detail as well. So okay, let me go to the spreadsheet. Okay, so in this spreadsheet here, basically I have the same format, if you have noticed on my RBC side. So what I have a different components here, and we'll go there one by one, pretty much a lot of components. So here we have the latest Q2, basically today or yesterday in case of RBC, the second quarter of 2020, and then first quarter which ends in March, and the December of 2019, and so on. So we are going from backwards here, and the same setup what I did on RBC, but here I'm just doing the comparison. This is the first 2 quarters, right, of 2020. This is the first 2 quarters of 2019, and then this is the full year, and then we'll go compare on each basis. So let's see from the revenue perspective, right? So blue color is for RBC and green color is for TD. So if we see from the revenue perspective, if you see this, the $1 billion up, mostly 9 to 10. This here is 2 billion up in terms if you compare by quarter to quarter, right? Right. So this one is almost same, but here is a little difference. But let's see from the 6-month perspective, right? So in 6 months, this is 2 billion difference. Is the 2019 is 3 billion. But if you see from the annual, the major, so you can see why there is a price difference. So we can, one way to justify that, RBC is growing. You see the generating more revenue, right? 42.576, and this is 46, and here this is 5 billion less, and here is pretty much I think 4 billion less, right? So RBC is growing on annually a little bit better, I believe, as compared to TD, right? If you see just not the trail difference, but on the difference in terms of their earning on each year, vertical wise. The next is, this is a very important ratio to look into it. What is this telling? Okay, how bank make the money? The traditional bank who doesn't diversify, mostly, right, they make the money in terms of the loans or the spread. So basically they get the money in spread. So they get our the deposits, and then they issue loan in, right, to the corporation, to the wholesale, and to us in terms of the mortgages as well, right? So that's their main business, and that's pretty much the main business of TD, RBC as well, but a little bit less because it's more diversified, right? So if you see here, so then they have a two kind of income, interest income and the non-interest income. So here, what I'm trying to show here is what is their non-interest income. Okay, this one we already covered, so I highlighted in the color. So RBC, the non-interest income is, you can see, is only 39% in second quarter, right? So it's way less. Whereas, in TD, whereas in blue color in RBC, this is over, almost like close to 60%. So almost like a 20% difference here. On the, if you see, mostly 15 to 20%, right? If I see here, let's say on annual wise, right? So if I do this difference on 2019, just on the yearly range minus this, yeah, you see it give me 15% difference. So that's a very big number in terms of the revenue which the RBC can able to bring. Okay, maybe I'll leave it this one. So let's try just for fun for 2018 as well to see. So this is the full year. So you see, and the difference is even growing from 14.8 to 15.1. So this is the net interest margin. So net interest margin is how much interest income they are paying, like in terms of when we deposit, how much interest we get, in terms of how much they can able to generate when they charge the loan. So that's a kind of a spread margin ratio you can think. In this one, certainly by no doubt TD beats RBC, right? Good thing about RBC is that their loan portfolio is not the percentage is not big. It's only 48%, and whereas TD is almost 88%, and that's not a big difference. If you see just the 40 basis points overall, right, is 61 and 90, but still it's clearly there. On the efficiency ratio, if you remember yesterday, just to review the point, how efficient they generate the income, right? So usually if it's I see pretty much they are in the similar ballpark. If I compare with RBC to TD, it's just 1% here and there, which is I don't think so is very good. Just in this, if I see on the annual comparison, and similarly on the first 6 months is not for sure. If I do quarter to quarter, there is a little bit more difference, but overall when we see the high level within 6 or 12 months, I didn't see much difference in these two. On the effective tax rate, how much tax rate they have to pay, RBC I think did a good job here in this quarter. They have to pay less taxes, maybe because of their diversified business they can able to save some tax, whereas TD, although they are making the same less amount of money, but TD they have almost the income is dropped, but they're 2% higher they have to pay in terms of the taxes, which is not that great, right? And how we can see that, pretty much one way to see that is the earning per share, which is just the next ratio, right? Because RBC generated $1 for one share in this quarter. I'm not talking about the full annual. I'm just talking about only for 3 months, right? So, and here they generate 80 cents only, which is maybe because one of the reason is they are paying more tax, right? On that one. On the earnings side, this is a very important ratio. So maybe I'll highlight. Others are important as well, but this is good. So earning per share, right? Because that's what basically as a shareholder we are much concerned, because that's what basically it's coming, right, as a final earning for the shareholder. So this earning, if you see here, for sure RBC is every quarter wise RBC is generating pretty much $1 or 60 cents or 80 cents more, and here was bad only for this quarter. But on this if you see on the first 6 months is $1 difference, and then when it comes to the full year is add another maybe $1, and it's come as a $2 difference in terms of the earning. So maybe that's one of the reason as well, that not only the revenue is higher, but the bottom line is also higher. So we can know that why RBC price of the share is higher, right? That's one of the judgment I can put there. So 2 points there to explain, because if you see their market cap is not that much difference, right? Only like 20 billion. That's a lot of money, but they're pretty much close by. Let's say on the return on the equity, return on equity is, we have already see that on the 15, 5 or 10 year average, but here I have also put that on the quarterly basis, and again on the yearly basis as well. Again, if you see on year to year, RBC beats TD on that one here, and but it's not that bad as well, right? TD is not, so they are doing pretty good as well. Leverage ratio is how much basically debt they have. Pretty much I didn't see is as a bad, because bank business is generate more debts, right? So if they generate more debt, they get more income, so I won't see that as a bad. So also this ratio is pretty much closer together, so that's what I want to hit. Next is how much the dividend yield they are doing. This thing I want to highlight it. If you remember yesterday, right, maybe I'll do these two things together. So they announced, RBC announced yesterday 4.7%, and TD announced 1% more dividend, 5%, which comes to be a surprise that it's almost 98. Maybe I'll do this in a black color so it's easy to see. Right, or maybe different color. Yeah, it's okay, but that color was actually hurting the eyes. Okay, so RBC was paying 108% of their income, and TD is paying close to basically pretty much whatever they're earning for that quarter in the dividend, and the dividend is also increased almost their effort show 1%, and RBC also increased to 4.7%. So pretty much if we can see here, the average on average the yearly 40 to 45% So RBC is paying more in terms of their share in dividend. If I see on the yearly, here they're paying almost 5% more, here paying their 3% more, right? On the yearly basis, or quarterly is like a 2 or 4% more. So that's more of the money it's coming to dividend. That's good as our investor, that we are getting more. Yeah, if it's a percentage and it's consistent, right? The good thing is their dividend, basically both companies, if you notice, is increasing, right? The percentage of dividend is increasing, so that's pretty good. So 3.7, 4.1, 4.7, 4.4. So both companies are doing and committed in terms of the dividend, right? So that's it so far. So next thing I want to touch is, okay, how the TD does in terms of the depression, right? Is it does like a V shape, like in terms of RBC? So let's check it out, right? So here I am again on the Yahoo Finance. So let's go and check it out. Okay, so yeah, you see here, this is the 2009. I am on the TD. This is the TD stock. .TO means is Toronto CAD, and this is their price, right? So after today's announcement, TD jumps as well, just like any other RBC, $5 more, but they did a pretty good move as well, right? So it's a V shape. Look, the price comes down and suddenly soon within, if I bring it here, it will come up. So it's also like a V shape. Let me refresh you with the RBC as well. You see, I think RBC, if we see, is a little bit more narrow shape, if I say, but both, yeah, this, you see, this is take a little bit more time, wider. The slope is a little bit wider, but here the slope is very narrow, if I do, right? So maybe let's compare it here, right? Maybe I'll add it just for the fun, right? Okay, so first one is RBC. Let's compare with RBCY. Okay, so the top one is the RBC, right? So you can see RBC goes pretty much, they follow, both share follows the same, but RBC is quite high in terms of the pricing, but here you see both follow the same. So that's a little bit surprising, right? Pretty much as the market move. Here you see RBC went down only up to here, but TD drops even further, right? 37.64, and RBC stops here in terms of the drop, 25.37% when the recession happened. Oops, what about, oops, let's do it now. Now even the same, right? RBC I think 0.7, and then TD's further drop. Okay, so that's in terms of the price, and that in terms of the here as well. So if I want to summarize, right, what we get from both, I think recover well on that one. So what we have seen, so we have seen in terms of the return, they're both doing well. In terms of the digitalization, number 2, right, both company, TD is also doing well. Third, they are using their efficiency ratios down there is good. Fourth, the G-SIB is in the G-SIB, that's good. And so this means they have put extra liquidity. I didn't see anywhere where they say it's just like RBC, they have put extra surplus. Maybe it's there, I unable to find. That's I'm not saying that it's not there, but maybe I'm unable to find. But both are G-SIB, and so basically they have very and they are consistent in terms of a dividend as a common shareholder, right? And they are stable. Canadian banks are stable as compared. So that's one. The only one thing I don't like about honestly about TD is they are very much into the retail, and very heavy into the US market, right? If you have noticed, let me go back. Yeah, so you see they are 20% in the US market, and US economics right now is in very bad shape, right? And that's a retail, and also that's a retail side as well, right? So this means if people default more, they're unable to pay, their bank might get more suffering, right? So sure, they have a good foundation, they are keeping the buffer, just like in Canada, as a mortgage pay, we get the opportunity to defer our mortgage payment for 6 months, right? So we all know as a Canadian. So after 6 months, for sure, the interest will add up and we have to pay more. So it's not like we have, so that's the benefit for them. But what will happen if unemployment didn't come? Unemployment didn't stop. People won't get the jobs and things get worse. If I think from that kind of a perspective, maybe I didn't see much immediate growth, just like what I was seeing when I'm comparing to RBC, right? So that's what I'm trying. It's a good bank, it's stable bank, and it can serve, for sure it can survive. But the two things affects me, right? If something more worse happen, then I think because of this retail portion here and 20% US exposure, it can hurt. If I see that, honestly, RBC has US exposure as well, 23%, but there is more. They don't have much as from the retail side, because their retail portion is only 48% overall, you see. So that's a little bit. If you want to see more on the RBC side, my video, I'll put a link there. You can see or search on my channel. But now, in terms of my opinion, if I want to go, I can. If I want as a preference, my preference will be first RBC and then second TD. So or what I'll do, I'll put a little bit share in both places, right, to split my money. Actually, if you see, I also have some very minor shares in TD as well, is right, but the more on the, that's what I have did, but that's my choice. But I'm not sure, because each individual profile and opinion is different, so you have to follow your financial advisor and thought from that perspective. So I think both in the long term, both are very good, and G-SIB, the good stocks, right? So if you still rest is up to you. So thanks for watching, and kindly, if you're new to the channel, please subscribe, and if you like it, then it goes to the Google algorithm that this is a good content, and it promote. So by liking, by put the comments, I'll think that you admire me and admire my work, and it motivates me also to keep doing this kind of video more and more. And one thing I want to ask you is today, always for sure I'll ask you to like and comments more, but which one is your favorite stock, right? Which one you follow, which is in your portfolio, and why? Can you put in the comments and share with us? And thanks for watching, and see you in next video. Bye for now.